Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Hey, good morning.
Why are you looking at me like that? Good morning. Welcome to Canadian Real Estate Investing Morning Show. My name's Wayne.
And I'm Gabby.
This week has been all about tenant management. We've been talking all about all things tenant management. We talked about preparing your rental listings. We talked about, I can't remember the other one. Being the best landlord.
The best landlord.
And so what we want to do is we want to stay on this topic all week today, or all week this week. Today, we're going to stay on it today.
Today and all week.
And all week. So that you can build out everything you need to know in setting up your systems for tenant management as a real estate investor.
Yeah.
So what we're going to do is today we're going to talk about the trick to keeping long-term tenants. We talked about attracting them. We talked about being a great landlord. Now we're going to talk about keeping them and what's the trick to doing that.
Mm-hmm. Tenant turnover is easily the biggest expense when managing your real estate investing portfolio. And it's the one thing that can actually be avoided, right?
That's a very good point.
Yeah.
It is. I would say it has the potential to be the most expensive expense for your rental property, for owning it in the whole duration of owning a rental property. It has the potential to be the most expensive expense. Mm-hmm. But it's also the only one that can be fully avoided. Yeah. So it could be the best or the worst. Mm-hmm. You know what I mean? So yeah. I like that. And I think that's something that I really want you guys to write down today and really, really, really remember this, is that it has the potential to be the worst thing about your rental property, but you are totally in control about it. You are totally in control of whether it happens or whether it doesn't happen. And we are talking thousands of dollars that are either going to be flushed down the toilet or thousands of dollars in additional profits.
I like the latter.
Yeah, I like the profits. I like the profits personally. Gabby is an absolute beast when it comes to property management and when it comes to You're welcome. When it comes to self-managing tenants, she manages our whole portfolio and does it completely remotely. So there's some really, really, really cool tricks that we have to share with you today, and we're going to be continuing to share these all week. If you guys are ever looking to learn more about self-managing your rental properties and you want to do it remotely, how Gabby does it, we have a terrific course on our website. You can just go to reimasters.ca, go under programs, and you can see it there. It's called Remote Property Management. It is hands down everything you need for building out your systems and building out everything you need to know, like the whole education and resources and everything for managing your own rental properties from anywhere. Whether you want to do it in your own city, whether you live next door to your rental property, or whether it's on the other side of the country. Building it out, like the remote property management course, is hands down the best way to learn. Go to reimasters.ca. It's like, I think it's like $500. Yeah. Which is completely reasonable for the amount of shit that's in there. Holy crap. Seriously. Yeah. And what I'm going to do this week, because we're on the topic, after the show, what we're going to do is we're going to put a discount code up just for this week. So this will be on until, what do you think, Friday, Saturday, Sunday?
End of day Sunday.
You're going to put it till Sunday?
You're going to give them the week. Give them the week.
You're going to give them the weekend?
Yeah. Okay, Friday.
No. I mean, I'm just curious. Sorry. Everyone's like, whoa. I get paid on Friday, Gabby. Jesus Christ. Okay, so what we'll do is we're going to throw a 50% discount.
Ooh,
how about that? 50% off the remote property management course until Sunday. Sometime Sunday. I don't know when.
I love doing that course. The coolest thing is that have had all different kinds of people take the course, like people just starting out and wanting to like make sure they get it right from the beginning, as well as seasoned investors who just wanted to know like what are the tricks, how are you guys like managing this aspect of it from, managing from afar, and so therefore taking the course to kind of like see the inside workings of how we do things, and to get the feedback from all of the in-between people as well. was just kind of consistently that like, this is awesome. This is going to change things for me. And I love that. Like, I feel like you get, you know, in our day to day, you get a lot of like gratification from helping people. Like you have a lot of one-off conversations throughout the day and a lot of people, you know, being like, oh my gosh, thank you so much for that coaching call. That really changed things for me. So you get a lot of like that gratification. And, you know, for me, I'm often just like in the background of the business, just like plugging away, working away, making sure that, you know, our business is thriving and staying afloat. Yeah. But I don't get a lot of that like kind of like gratification throughout.
You get shit.
Yeah, I get shit on a lot. Not by people, not by you guys, but by our business and tenants and, you know, all that kind of stuff. So putting that course together and seeing it impact people and how they run their business and knowing that they get to utilize the systems that make our business so successful is very fulfilling for me. So I'm happy that I did put that together and that it's received well. And yeah.
You invented remote property management. I mean, like everyone could be like, oh, well, I've been managing my rental properties from afar for a long time. But like the systems that she put in place and putting it all into one package that everybody can understand. So that like, there's no like, oh, I understand this, but I don't have this. Like everything all in one location with all the documents and all the resources and everything you need. Nobody else has ever built anything like this before. There are no other landlord courses even remotely close to this in Canada. There are like some cities put on little, here's landlording 101 course about like, here's how you put together a lease. Here's how you ask good questions and do credit checks. It goes 1,000 times further. And then everything. And then to be able to self-manage a huge portfolio and then doing it from anywhere without ever having to leave your desk. I'll give you a great example. This morning, you know what we woke up to this morning at 6:04?
Literally as the alarm was going off.
6:04 or yeah, maybe it was 6:01 when the alarm went off at 6. Slept in a little bit. An email from a tenant that water is coming down from the ceiling.
Literally, like
a video. She's like, look, and there's water coming down.
Yeah.
And so instantly Gabby was able to look at it, and I looked at it too, and I was like, yeah, she's got it. And what would normally scare the shit out of people is just like, okay, cool. I know exactly what I need to do. I know the response. I know how to handle this, and I know who to call. Right? So to be able to do that, just as she wakes up, a quick little email response, and then a quick little message or an email to somebody else to be able to handle that is so cool that you're able to do that. It's just one example. You know what I mean? And some people will be so scared, be like, oh, I could never have it in another city. We never go to our rental properties, ever. And yet, we run one of the most successful rental portfolios in Canada. So many people are like, oh, I really, really want to invest in real estate, but I'm going to have to find a property manager. I'm going to have to find someone boots on the ground and things like that. No, if you build the right systems and you build it out properly, you don't have to worry about that kind of stuff. So you choose the right tenants, you have the right rental listings, so you attract the right people, you choose the right people, and you set up the right systems with the right team, and everything is so incredibly easy. I promise you. And you can build a massive real estate portfolio and not have to worry about it. Yeah, it's a little bit of maintaining. And of course, like normally our assistant would handle something like this, but we know our assistant's not starting in for a few more hours. So Gabby still keeps an eye on it. She's like, I'm going to handle this just to make sure that we get on it. Because if there's literally water coming in and not stopping, then obviously we need to handle that quickly and give them the proper advice. But, you know, I would honestly say that I think that 10, 20, 30, 40 tenants is completely manageable for anybody. 50, 60? Okay, the more tenants you get, the more difficult, the more maintaining. So once you get to that point, you're gonna have to build out your team and start delegating a little bit, but like we do. But
yeah, I was gonna say there came a point where we needed an assistant just to kind of keep up on things.
For sure. Well, and also to keep up on our lifestyle. We want to make sure that our lifestyle. So as you continue to scale it, the more and more cash flow, the more money you build, then you can start reinvesting some of that cash flow into having an assistant, depending on your business model. But we could obviously help you out with something like that too, and helping you build that out. It really depends on what your long-term goals are for real estate, right? My goal was never to have an assistant to do something like this. Our goal was always to do it ourselves. But once we got to a certain point, and once we started building other businesses as well, we knew that we needed more people on our team in order to continue to keep scaling. So there are certain thresholds where you would need to bring somebody else in. But this remote property management course is hands down I think what everyone should be doing. And I don't hate property managers, and I don't hate paying for property managers. I mean, I hate a lot of property managers, but I don't hate all of them. I heard a great story about a property manager the other day. Did I tell you that story?
No, but I did hear you from the other room talking. I didn't put it all together.
Yeah. Anyways, but there's some bad property managers out there. But I'm saying I don't hate property management companies. I think that for the right people, they serve a need and they serve a purpose. However, the fact that we manage our own properties literally puts tens of thousands of dollars in our accounts.
Literally, yeah.
Every month that we would be spending on property management.
Mm-hmm.
Literally tens of thousands of dollars every month. And does that mean that we go and spend those tens of thousands of dollars? No. What we do is we leave it in the reserve fund so that when we get a random email at 6:01 in the morning on a Wednesday and they say water is rain falling in from the ceiling, what do? We call the right person. They invoice us in the afternoon. Somebody pays that invoice. Done. And we go on to whatever it is that we're doing. Today's Wednesday?
Yep.
It's fish and chips day. You want to go get some fish and chips today?
I don't know, maybe.
We should go get some fish and chips. Our favorite restaurant has a fish and chips day thing on Wednesdays. Let's do it. Why not? You know what I mean? To be able to go and do that, to be able to go and actually today we got a bunch of errands we're going to be running, but we're going to be out. We should go get some fish and chips, right? To be able to go do that, to be able to go run errands, to be able to take our daughter out, to go drop her off at her friends or pick her friend up or whichever. You know what I mean? To be able to do that and have that freedom and flexibility because of all that, what we built, right?
Yeah.
Anyways, long story short, buy the course, learn how to do it, and then you can have that. Or don't. Whatever.
And today we'll talk about a lot of aspects of how to avoid those very costly things that don't need to happen in your business.
These little things that we're talking about, $100 here, $50 there, $1,000 here, tens, all of that adds up. It adds up, and it adds up to better returns and more freedom. Mm-hmm. All these this seemingly like minor and minuscule, but they all add up, and it puts more profits in your bank account, which creates more freedom. Yeah. And how you use those profits and how you leverage them and how you build out your portfolio in the long term determines what kind of a life you build. And look at us, like we've built a phenomenal fucking life, right?
Yeah.
But it all starts with the little things and building it out the right way. So that's why we do this podcast. That's why we offer these great courses. That's why we have our mentorship program. If you want us to work with you one-on-one, that's why we have all of this, in order to help you figure out those little things to build it right so you can build the life that you want to live, right? So we're going to be talking about the trick to keeping long-term tenants today. Great coaching session last night. I'll talk about that real quick.
Really good.
Tuesday nights is our weekly coaching session with the REI Masters Mentorship Program. We talked about special assessments. So we had a student who's very successful real estate investor, doing fantastic in his first year of investing. Was looking at a condo, but there was a special assessment proposed, but then they didn't pay it. So we kind of went through all the paperwork to kind of figure out what's really going on with this and how big of an impact is this going to have. Just understanding, the weight or the weighing of the risks and determining whether there was opportunity within those risks or between them.
Yeah.
Then we talked about renovations. One of our other students has an accepted offer on a new cash flowing rental property.
Yep.
But they were wondering, it's in good condition, but we could do a few little minor renovations. Should we?
Yeah, I think the real consideration was, if I do more than what I need to, is that going to increase the value? Should I want to, refinance and pull out money down the road and that sort of thing? So it's kind of like, can we go a little bit further than what we need to in order to push the value? And
great question.
Amazing question. Really good considerations. But it's funny because in this case, we were going through the pictures of the listing and stuff, and I was like, wow, this is like really nice, rent ready. Like, no, you don't need to lift a finger.
Yeah.
Yeah. And doing anything really isn't going to push the value beyond what it already is. Like, this is a fantastic property.
Yeah, funny story. I actually walked through that property and I almost bought it myself, and my student beat me to it.
Yeah.
So that's how you know. That's how you know that you're doing a good job as a coach, is that your students are recognizing the same amazing opportunities and beating you to it. That's how you know. That's a good sign.
Yeah.
And I was actually quite impressed. And then it's funny because they told me that they wrote an offer on it, and I was just about to write an offer. I'm like, whatever, I'll just let them have it. But they got an amazing deal on it too.
So
they got
good.
I think they got like 10% off the price or something like that. You know what I mean? Because they saw an opportunity that other people didn't see. I saw it, my students saw it, and they picked it up and they got an amazing deal. And I think we were looking at it. There was some issues with it, but they recognized those issues as an opportunity, similar to how we were talking about with special assessments. A lot of people would just be scared. They saw an opportunity there that most people were scared of, and they ended up, what did we say, that there's going to be a little bit of money just to do a little bit of fixing up and repair. But what did we say it was going to be? I think they got it for about $40,000.
I was going to say easily $40,000 under value.
Yeah, so it's worth about $200,000, and they're getting it for just a little under $160,000. And it was just sitting there on the MLS. Insane. I saw it, I knew it, but I hesitated because I've been so gosh darn busy, and I don't want to take on even the smallest projects, even the smallest little renovations or repairs. So I hesitated for half a second. I took half a breath,
and they snagged it.
They snagged it on me. So I'm really happy about that. I'm really happy that
I love it. I love that.
When you understand the strategies, you recognize the opportunities. Yeah. Barry Maguire, it's a famous quote from Barry Maguire. When you understand the strategies, you recognize the opportunities. They recognized it. So really proud of them. We also talked about wholesaling last night.
Yeah.
What was the topic on wholesaling?
It was surroundings. They had a buyer reach out, but they actually already had a realtor, listing the property. So it's kind of like what's the ethics, what's legalities, around actually, around in and purchasing this property if they already have engaged in a realtor.
It happens quite a bit. Yeah. And so we just inform them of what the proper, legalities are around that, the broker agreements, and making sure that you're being honorable, and then also the ethics of it. Yeah. Because you do see that happen a lot of, people trying to work around realtors and screw them over.
And I love that they knew to ask this and was like, I don't know, it doesn't feel right. Like they've already been working with this realtor. So I love that our students have that, the built-in ethics.
Good people.
Yeah, good people.
And then lastly, we were talking about joint ventures and assessing, assessing the risks of working with other investors and many. So
in this case, it was kind of like too many cooks in the kitchen. Like, how's this actually going to work? And is this too many people involved? And trying to put the pieces together of what was actually going on.
Profit splits and risk and responsibilities and things like that. Yeah. It was a messy little concoction that someone was trying to put together on a deal, and you kind of look at it and you're like, well, what's the opportunity here? How much meat is on the bone for me? And then what's the risk? Yeah. You know what I mean? What's the risk of me going and trying to get this? And, by the end of it, we kind of looked at it and, we offered our feedback, and ultimately our students choose at the end of the day. They make their own decisions, but we offer our feedback and kind of go through all the possible scenarios and outcomes that can happen and weigh the risks and the rewards. But ultimately, the investor, the student of ours, just said, yeah, you know what, it's exactly what I was thinking too. Yeah. And it doesn't seem like it's really worth the trouble of it, the potential. But a terrific coaching session, and that's what we do every Tuesday with our students in the mentorship program. If you guys want to get in on that, that's totally a possibility as well. But, reach out and book a discovery call. We want to make sure that it's right for you. As you can tell, every week we get into some pretty advanced and in-depth conversations about real estate investing. And that's where we really get into the good stuff, and we really get into the really, like I said, in-depth, advanced strategic coaching, where we know everything about our students and what their goals are and the outcomes that they're looking for, so we can fine-tune that coaching specifically to them. And if that's what you're looking for, if you're looking for a more, closer hand-holding for your journey and making sure that you're reaching your targets to eventually get to your long-term goals, that's what the mentorship program is all about. Mm-hmm. But if not, whether it be, timing, or whether it be because you're just too cheap, I'm kidding. The Canadian Real Estate Investing Morning Show is here every weekday morning for you. And we will cover all topics And we're going to continue to keep doing that this week. We're going to be talking about tenant management. And we will answer any of your questions. So if you join us live, you put any questions in the chat, we will answer your questions. If you want to send in your questions by email, you can send in your questions to info@reimorningshow.com. We will answer your questions. Anything you guys need, we are here. We've seen it all. We've done it all. We know it all. We are here as a resource to you guys. There is zero excuses to make stupid fucking decisions. Okay? Mm-hmm. Don't fuck around with your investments. Don't fuck around with your money. Don't fuck around with your family's money. Don't fuck around with other people's money. Okay? There is zero excuses, right? You choose what it is you want to invest in, but you have the opportunity to learn everything you need to learn because the resources are here for free. There is no reason to be losing other people's money and doing dumb shit. Okay? Because that's why we're here, right? If we weren't here, then obviously, yeah, you maybe. But anyways, I digress. Okay, we're going to take a quick little commercial break. When we come back, we're going to dive into the trick to keeping long-term tenants. We'll be right back.
Real estate investors need to treat debt differently than homeowners. And at Kirkland & Brennan Mortgage Group, we understand that. For the last 11 years, we've helped real estate investors plan and build their portfolios. We understand how to help you avoid fees, penalties, getting yourself stuck, and making sure that the deal you're doing today doesn't stop the deal you want to do tomorrow. You can reach out to Keaton, Keaton, at kbmortgages.ca. Put plan on the subject line and we'll help you build a plan and then realize it for your real estate goals. We also coordinate with the other professionals like your accountant, lawyer, realtor, and we will help you build your portfolio. So reach out. We'll do our best to help. Thanks, guys.
You've got showings, lease signings, suite renos, condo board meetings, credit checks, mortgage financing, and every so often the tenant clogs the sink because they shove macaroni down there. Stop. Breathe. Leave the bookkeeping to Fingo. Fingo is specialized real estate bookkeeping by real estate investors with tailored services for maximum returns. Save time. Enhance your returns. Claim the plumbing repair for that ridiculous macaroni fiasco. Book your free consultation at fingo.com.
Summer. While everyone's getting distracted, this is when the market gets quiet. Not because the opportunities disappear, but because the people do. Vacations, long weekends, these are the distractions I'm talking about. And that's exactly when serious investors make their moves. At Calvin Realty, this is one of our favorite windows. Less competition, more flexibility, and sellers who are actually open to negotiating. While everyone else is stepping away, we're stepping in. If you're looking to buy right, not just buy fast, this is your edge. Calvin Realty. Opportunity doesn't take time off.
And we are back.
We're back. Speaking of the mentorship program, on the break, I just noticed that Kyle renewed his mentorship program for another 12 months.
Nice.
And yeah, so that's awesome. Congratulations, Kyle. Yeah, he's building his mentorship, his wholesaling business,
yes.
as are a few other of our mentees. So it's very exciting to be helping them along and making sure that they get the guidance and get those questions answered that, like the one that came up yesterday. So very excited for Kyle. Congratulations.
Big congratulations to Kyle for doing that. And if you guys are looking for deals, we've got students that are out actively looking for deals. Across Alberta. That's where they're doing it. I mean, but if you're looking for deals anywhere else, you can always just send us an email as well and say, hey, do you got any students that are looking for deals here? Or, hey, I'm looking for this type of deal. Let me know. I can connect you with our students. And the way that we teach our students for wholesaling, I don't want to go down the big rabbit hole, is really just beginning with the end in mind and being intentional and not just trying to grab a bunch of just random deals. Like, oh, I've got some $40,000 mobile home in some, butthole town of 300 people in northern Manitoba. You know what I mean? Like, what our students do is they're intentional and they will work with investors first. What is it that you're looking for? And they will go and find those deals for you. So if you're looking for good, strong wholesalers that are willing to go and find you exactly what it is that you're looking for, and you are the type of person that knows what it is that you're looking for, reach out to me. I'll connect you with our students, and they can go and literally find you those deals, right? So that way you can focus on the things that you need to focus on, whatever those things might be. Maybe it's a renovation that you're currently working on. Maybe it's finding that next joint venture partner, right? It's all about building out the right team and having the right people around you. So we got some amazing investors in our program that are ready and willing to go and put the work in to find you those deals. So
ethically,
right? That's very important.
Yeah.
Okay, so let's talk about the trick to keeping long-term tenants. I mentioned this earlier. Tenants moving, and you mentioned this, tenants moving is easily one of the most expensive expenses.
Yeah.
It has the ability or capability of being the worst thing that can happen to your profits
over time
of owning a rental property. It has the capability or the possibility thank you, of being one of the worst expenses in owning a rental property in the long term. However, it is the only expense that you can completely avoid. So by putting in the right systems and being intentional when you are buying your properties is going to, or has the ability, you have the ability. Why can't I put my words together this morning? I feel like I'm mixing 7 different words.
Capability.
And I keep juggling those words in different sentences.
Where's Stuart? Take a shot.
Thank you. You have the ability to be able to prevent it with the right systems is what I was trying to get at. Completely lost my train of thought.
Yeah, that's okay. But I think that before we really dive into how to avoid those costs, I think we should just highlight what that means. Because when we have tenants moving consistently, when we can't seem to keep tenants in place and they are moving every year, or maybe they're even breaking their leases early, and we have that constant turnover of tenants, we're putting ourselves at risk of a few things. The first thing being that maybe we don't fill the vacancy right away, and we end up with holding costs for like a month or 2 months where there's not a tenant paying our expenses, and those need to come out of our reserve fund or our pocket.
Okay, so what you're saying is when the tenant moves out because they do not renew their lease, let's say at the end of the year, they say, I don't want to renew, and then it sits empty. Yeah. There is a period of time where there is nobody in there, and all of those expenses that we still that are fixed expenses, like your mortgage, like your property taxes, insurance,
utilities,
any HOA fees, and do we cover everything?
More or less, yeah. Condo fees if it's a condo.
Also maintenance. If the tenant was responsible for lawn care or snow removal, all of those things during that period, those are all expenses that we have to cover. Normally, they would be covered by the tenant's rent, or they would be covered by the tenant's responsibilities. And so when it is sitting empty like that, those vacancy risks can be very expensive.
Yes.
And we're going to go through some numbers in a little bit here to kind of talk about, just how bad you could be potentially exposed to. You mentioned a few other things as well. You said there was a couple others.
So that's the big one. That's the really big one. The big scary one is that you never want a vacant property. But also when you consistently have people moving in and moving out and moving in and moving out every year, what you're going to notice is that the wear and tear on the property increases. So when you have a tenant move in and they stay there forever, there's going to be a lot less wear and tear that happens in the property because they're not stomping around, moving furniture in, bonking up the walls, doing all those things, right? But when you have somebody move in, first they have to get their stuff in, and then 1 year later they're moving it out, and then a day later somebody's moving their stuff in, you're going to notice that there's going to be a lot more dings in the walls and chips in the paint, and if hopefully it's not in the winter and they're tracking snow in and mud out and all those types of things. So there's this increase in wear and tear that happens when you are consistently having people in and out, in and out, in and out, in and out, versus they move their stuff in and they stay a long time and there's just regular life happening inside the walls. Right?
Yeah, and even if they were doing dings and scuffing walls and things like that, but if they stay for 10 years, they don't care because it's all behind the couch, or it's it's where the table meets the dining room wall. You know what I mean?
You don't need to go in and touch it up before you get that next tenant.
Exactly. Yeah. So that there's huge savings there. You're right, because every time that it gets empty, and you know what? Maybe there is a couple dings in the wall. Maybe there is some scuffs in the paint and things like that, but you can leave it, which means that when you go and now you're trying to find a new tenant, what do they notice as soon as they walk in? They notice scuffs in the wall, they notice gouges in the floor, they notice, there's chips in the corner of the wall, that it looks rough. So you think, oh, this doesn't look very good. Nobody's going to want to rent this. So you go in and what do? You go in, you start touching things up and you fix things. So you send a handyman in there for half a day. They charge you $500 for materials and labor. It's $500. You also have a month of vacancy. My goodness. And that's once a year, $500 just to go and do touch-ups. But then on the second year or the third year, now we've had 2 or 3 tenants moving every year, a new tenant, every year a new tenant. You got all these little dime-sized little paint touch-ups all over all the walls. We just had this happen recently where we filled a vacancy over the summer. And after the tenants moved in, everything looked fine. I mean, it's okay enough, and it's been 10 years since it's been painted, but it's in decent shape. But as soon as they moved in, they sent an email, and I saw this, and we never talked about it because I knew how it was going to be responded to. But I saw an email from a tenant, and they said, "Hey, by the way, are you guys planning on repainting this whole house?" And I was like, "Shit." But thankfully,
so we've reached that mark, yeah.
Yeah, thankfully it didn't affect their decision to rent it. But had they brought that up while they were, considering it, or if every tenant that walked through, potential tenant that walked through, said, "Are you guys going to repaint this place?" We would probably have to repaint it because that could have been a deterrence.
Yeah.
From someone choosing to want to rent there, right? Because if they had other options,
their application, yeah.
And how much is it going to cost to do a full house like that to repaint? $7,000-8,000?
Yeah, easily.
Right now, that was after 10 years, and of course, that was from I think we had maybe 2 tenants living in that over 10 years. So thankfully, we didn't have to. But if we had people moving in every other year, and we constantly ran into that issue of tenants looking at it like, "This place is a dump," or like, "You guys planning on repainting this?" Think about how many extra times you would have to paint because of that, right?
Yeah, so these are the things that we want to avoid. And this is why we say it can be a very expensive hit to your bottom line if you cannot maintain long-term tenants.
We need to keep long-term tenants.
Yeah.
If we do not keep long-term tenants, and if tenants keep moving every 12 months and we get a new tenant, constant turnover, we are exposed to all of these risks that Gabby just explained. Yeah. Months of vacancy, hundreds of dollars, if not thousands of dollars of unnecessary repairs. All of that gets subtracted from the bottom line.
Yeah.
All of it. And it will determine how profitable you are in your rental property. This is an absolute must. And so when we start talking about all of these little things, and then like this little list of little things that you need to be doing to ensure that you keep your tenants for long term, you're like, "Oh, this seems pretty basic." Now you can understand how fucking important this is.
Yeah.
Because nobody's going to teach you this shit on stage at some fucking seminar. They're going to tell you about buying millions and buying billions and stuff like that, but they're not talking about how to actually make these things profitable. Because it doesn't matter how good it looks on a pro forma. It's the actual numbers 20 years later that really matter.
Yeah.
And I'm telling you right now, nobody's going up on stage and showing their actuals 10, 15, 20 years after they've been doing it. They talk about how big their building is. They talk about how much, the value of their portfolio is. They talk about how many assets under management they have. They talk about big numbers to get you excited about buying billions of dollars of real estate, but they don't talk about their profits. And that's why we're here today, to make sure that it doesn't matter how many fucking properties you own, how big they are, how big your portfolio is. If it's not profitable, it means jack fucking shit.
Yes.
So
yesterday we talked about how to be a good landlord. And this absolutely ties into keeping tenants long-term.
Yes.
Like 100% without a doubt. That's where you need to start. Because things like, doing those immediate repairs when things break, having really great communication, the gifts, like going the extra mile to be a good landlord is going to help you keep those tenants long term, right? Once they're in, those things are all going to contribute 100%. So that's where we want to, that's not where we want to start, but that's where you should be going back and listening to yesterday's episode to bring this into the equation of keeping tenants long term.
Being a good landlord is where you need to start, because if you're not a good landlord, then they're gonna leave.
Yes. Yes.
So it's almost like it seems like common sense, but at the same time, if you don't do it, it will be the number one reason why they leave.
Yes. But there actually is somewhere that we do need to actually start before we can be a good landlord. We need to make sure that we're buying good properties that tenants want to rent and want to stay long-term in.
Yes.
Right?
You got to be super intentional.
So you need to be intentional. You need to know who you're attracting, what kind of, is it a nice family? If it is a nice family, what do they want? What's important to them, right? And we need to make sure that we're buying the appropriate properties that are going to keep them there, that they're going to want to plant roots in, right?
Absolutely.
And so, we want to talk about things like the layout, really like the functionality of that.
That's a good point.
Kind of like that can also include like the size of the property.
Yeah. Well, like in functionality, like what does that mean? I mean, like functionality, it means like when well, like you said, the layout of the property. If the layout is great, then they're gonna love it. But I feel like a lot of this is going to be common sense, but then I'll say like, if it doesn't have good functionality, it will be the number one reason why they don't stay. And so like, for example, if it's, I remember like a house we used to own, it had 1 bedroom upstairs and 2 bedrooms downstairs. Yeah. Split level houses. So there's a lot of them that will like, they'll have a certain amount of bedrooms upstairs, and then in the split, they'll have a lower split level that has bedrooms farther away. And so you think, I've got a 4-bedroom house or I got a 3-bedroom house. This is going to be perfect for a family. But when baby's down, like 100 feet away, you know what I mean? And there's a window at ground level. Mom's not going to feel too comfortable about that, right?
Yeah.
If your bedroom's way up here and then the kids' bedroom's downstairs and you can't hear them because it's so many floors away and such a far distance, how are they going to feel about something like that? So they might think about it at first. Wow, this is great rent, great area, great everything. It's a house, finally something within our affordability. But after 1 year, they might be like, I don't know.
This is not working.
I'm under a lot of stress. I'm not sleeping. It seems like any noise I hear outside, instantly I'm running downstairs to check on my babies. Yeah. So that could be a reason why somebody wouldn't want to stay. So the layout of the property is really important. You don't want it, like you want a unique home. You want something that people are going to be like, oh my God, look at how this is all laid out. It's perfect. You want something unique, but you don't want it so unique that someone's going to be like, what the fuck is this layout? Like, this doesn't make any sense. You know what I mean? You want to stand out, but you don't want to stand out to your detriment.
Yeah. There's little, like when we talk about uniqueness, there's also just little things that can mean, like having a second living room. Like if there's extra square footage and there's like a second living room, that's something that people walk in and go like, oh, wow, this is awesome, right? Like this is an extra space for us to spread out into.
You guys might have seen a walkthrough video that I did recently in one of our newer properties, and it's got 2 huge living rooms. 2 huge living rooms and 2 huge dining rooms. It's a main floor suite, which I would argue right now is going to be one of the fucking hardest things to rent out right now. Main floor suites in Edmonton is one of the hardest things to rent out because everybody building their 8plexes, there is nothing but main floor suites on the market right now. Anything that's 3 bedrooms, if you click 3 bedrooms on whatever website you're looking for rentals, I promise you there is like 3 or 4% of the rentals available are houses. The rest are all main floor suites. And it's completely oversaturated. So because of that, trying to rent, a main floor suite when you've got so many competitors out there all around the same price is very difficult, very difficult. But ours has 2 massive living rooms, 2 massive dining rooms, an open concept kitchen, 3 big bedrooms, and laundry on the main floor, and a yard. So that right there, like that layout is one of our strongest. So actually, I know this because our assistant was filling this vacancy here over the last few days. In 3 days, we finalized that one. Done deal. So we filled that vacancy. Was it yesterday?
Yeah.
Within how long did it take us?
3 days. 3 days. Yeah.
3 days. I checked in. There were over 3,000 clicks in 3 days. And over 200 people reached out in 3 days. We had literally we could not get people in fast enough because we just didn't have the time to be able to book all of them in. And we got over 15 applications. Yeah. Somewhere around 15 applications.
At least, yeah.
In 3 days.
And had our pick of the crop. We signed an excellent application.
That's unheard of right now in our market because there's so much competition out there. What it was, and I thought it was going to be much more difficult. I was just talking with our joint venture partner about this last night, or yesterday afternoon. I thought it was going to be a lot more difficult, but it was the functionality of it, it was the layout of it, it was the features of it that actually stood out.
Yeah. And
because of that, our tenants, I feel confident that because it was also in the area that they wanted, it checked all the boxes for them, all of them. And we asked great questions and they gave us great answers, so that's why we chose them and their affordability. But it checked all of their boxes. I know and I feel confident that because of these features and because of the size, this is going to be the reason why they stay long term. Because if they decide that they want to move and they're going to try and find something else similar to this within their affordability, they're never going to find anything remotely close to this. Everything else is going to be inferior to it.
Yeah.
Right? So the fact that we chose that type of property in that area with those features was the reason why we had so many people reaching out and why the tenant is going to stay long term.
Yeah.
Right.
So something else that we can really be conscious of is the area in itself. And, making sure that we are close to amenities, like attractions is, it's kind of a weird thing to say, but, it's close to stuff that they're going to need to utilize. And I think about this one property that we just actually bought. I think it was it was last year. And I remember driving in because I was with you to view it. And the way that we came in, it felt like we were in this like secluded little like neighborhood and area. And I was kind of like, I don't know. But like the house worked. It was what we were looking for and stuff. But when we went around the back alley and to check out the rear, I realized that it was right across the street from like this major shopping strip mall that had your grocery stores, your gas stations, your like all those, a gym, like it had all those things that people want to be close to for convenience. And I was like, oh, okay. I didn't realize that this was just around the corner. I thought we were just like in this like one-off little like weird neighborhood.
Yeah.
And it's those types of things that are important to tenants. For that ease of being able to live their life without having to be completely out of the way of everything. So keeping those little conveniences in mind for that ease for the tenants.
A lot of tenants are major, like hyper focused on rent. But if all things are equal, and in a market like this that we're in Canada, where it depends. Every market is a little bit different in Canada, but like if you're in a market where there's lots of competition and vacancy rates are high, then you're going to have to really stand out, right? And here's the deal. Maybe you're in a great market, maybe you're not in a great rental market. Here's whether you're in a good or you're not in a not good rental market right now, you're going to be in a not good market at some point. Right? Because rental markets, they go like this. It'll be like super in demand, and then it'll be like super like difficult to fill. And it goes in waves every couple years. So you have to plan for the worst. You have to make sure that, maybe like it's really super easy to raise my rents and to fill vacancies right now. But in a few years from now, when it's not, how do I stand out? Yes. What features do I have compared to my competitors that are going to make me stand out? So little things like that, just not being in an awkward spot. You know what I mean? If they have 10 to choose from and yours is fucking awkward and the layout's all weird and you're not near anything, then they're going to go with the one that makes more sense.
Yeah. Right? And just like we said, they might take it, they might move in, but they're going to realize that their life is very inconvenienced. They can't get easily to go get groceries. They can't get easily things like transit, right?
Yeah.
Is it near transit? Not everybody drives and has a vehicle. Or if they do, they might also sometimes utilize public transit, right? So being close to transit centers or at least stops nearby that can help them to maneuver those things are important.
Just an added bonus feature for someone who might be looking for something like that, but not always just like public transit as like a service, but also just like transit for like the infrastructure of roads, ring roads, access to highways, access to main arteries. If they're in a weird spot and they have to drive 10 minutes just to get out of their neighborhood to get to one street and then drive, but in the mornings that street takes 15 minutes to get down, 2 kilometers because it's all bogged up to eventually getting on the highway that's always got construction. You know what I mean? They might be in a really cute neighborhood, but they might have a 45-minute commute that's only 5 kilometers away. You know what I mean? But it's just the way that it's all structured. So look at it from perspective of like, where are my tenants likely going to be going? You never know where they're going to be working. They could be working at that little strip mall just around the corner, but realistically, if they needed to get to the other side of the city, how long would it take them to do that? How long is it going to take them to get to all the different sections of the city? And if you're looking at this and being like, this is actually a terrible fucking place, then, you know, it's all good until it's not good. And then someone's just going to, they might, you know what, you might even convince them because you got brand new carpet in there or something like that, or it's got a hot tub and they're like, yeah, I love this place, it's got a hot tub. But after 1 year, they're going to realize I'm giving up an hour to 2 hours of my day every day because I live here. If I lived over here, I could get it for $50 cheaper and I'd have an additional 2 hours with my kids and I can actually get them to soccer on time. They're going to choose that one, right? Little dumb little shit like that you don't think about. You just look at the numbers and the performance. You're not looking at it from, hey, I'm planning on keeping this for 10, 15, 20 years and I want to be profitable, right? That tenant turnover, that constant tenant turnover is going to affect your numbers and your bottom line.
Yeah.
I did talk about rent a little bit and how tenants are very hyper focused on rent.
Affordability. I mean, I feel like that's probably the thing that's highest on their priority list is making sure that it's within their affordability.
Well, yeah, because tenants are always living more or less paycheck to paycheck.
Mm-hmm.
And the reason for that is because if they weren't, then they would probably be saving and they would probably own their own home, right? Not being judgy, just being real. Just it's common sense.
Yeah.
Tenants are typically living paycheck to paycheck. Now, could they have a little bit of extra cash flow and be saving? Yes, but that would mean that, you know, they would be, I would find that most tenants are trying to get the most that they possibly can. It's close to being in the home that they want to be in, having the right size, having the right bedrooms, having the right features like garage and a yard and things like that, not having someone in the basement. So I find, and especially with affordability in Canada right now, I find that tenants are literally getting the most that they can possibly get that checks as many boxes as possible. Yeah. You don't find a whole lot of, you know, 5-person families living in a 1-bedroom basement suite. Yeah.
I think it's really important just to be fair with your pricing, to be honest about the product that you have and being fair with your pricing, not just pushing it to push it. Because if you're like, oh, I'm just going to push it an extra $100 and see if anybody bites, in a market where it's tight, they might do it because they have to, because that's all that's available, and they might settle on it and be like, I guess we're stretching our budget. But when the market shifts and you're sitting up there and you're offering them a renewal and it's like, oh, don't worry, I'm going to keep rent the same. But the market is showing that there's other options they can afford for cheaper that are, you know, similar product. There's a good chance they're going to really consider leaving, right? Opposed to if you had just priced it fairly and, you know, it was comfortable for them, that means that they're going to stay and you're not going to have that turnover, which, as we mentioned earlier in the show, is going to cost you a lot of money in the long term, right? So just maintaining that fair pricing strategy rather than always pushing and pushing and pushing.
Yeah. And if you've got a phenomenal product in a great area that has way more than everything else, price it accordingly. If you can push that rent up and you know there's going to be strong demand for it and people are going to stay there because of what you got, then own it. Own what you got, price it right. But if you don't got it, price it right. Regardless, price it right. And you need to understand your product, you need to understand your market to know how much demand do I have here, and am I putting myself at risk by taking a tenant in? Is there a possibility that they're going to choose not to stay, you know, when the lease renewal comes up? Yeah. So ultimately, I think that to summarize all this, what you need to do is you need to choose the tenants who need this unit. When you're looking at the tenants, you know, we talked a little bit about questions the other day.
I changed that from needing this unit to the tenants that want this unit.
Yeah. I would still keep it at need. Okay. They need it.
Yes. But I think that there's like there's something here. It's like why do they want to rent here? Why do they want this unit? Are they settling because there's just a lack of stuff in the market and they're like, oh, okay, well, this will do. This meets our affordability. It has enough bedrooms. Mm-hmm. Let's do this one. Or are they like, I want this unit because it's close to my work. My kids go to the school in the neighborhood. Why do they want it?
Okay.
I see that as a want, not a need. Why do they want to live here? Because if you have somebody who wants to live here because of those things, because the kids go to school here, I work just a few minutes away, they have roots, right? There's already roots sticking into the ground that you can build upon and they can build a home here, right?
Yeah.
Versus, you know, it's like a need. I see more like, oh, well, this is all I can afford. This is what we need to kind of settle on.
Okay.
Right?
I can.
Is that an okay shift?
Yeah, it's just words, and
words matter.
And I appreciate your perspective on that. And obviously we talked about fair renewal offers as well, making sure when it comes time for renewals, making sure that you're being fair about it. If you're trying to jack up the rent as much as possible, you are playing with fire. You could have potentially, re-signed them and had no issues, but you got greedy. And when you got greedy, trying to make an extra $50 a month or $25 a month or whatever it is, and now they leave. Well, now you're looking at a full month's worth, potentially, a vacancy, or two, depending on, the market conditions. And then having to do hundreds of dollars worth of repairs in order to get it into a suitable enough condition in order to advertise it to find a new person. Yeah. So there's a lot of costs that come with it, and sometimes it's just not worth doing that increase. But just wait until a stronger market and then do it. Wait until later on when you're in a better position to make that offer, and knowing that they're probably not going to, because there's probably nothing better out there. Or you do your increase, and they look around and they realize it's still lower than everybody else's, right? So be considerate of that. Make sure you understand your product and price it right, okay? And that also goes for your lease renewals as well. I mentioned it earlier, and we're gonna close out the show here, that tenants moving is easily one of the most expensive expenses that can be avoided. Now, let's talk about some numbers really quickly here before we end the show, because this is going to offer you some crazy perspective, so you guys have a better understanding of this. Let's assume that the rent for this property, this hypothetical property, is $2,500 every month. Let's assume, okay? And each lease is 1 year, 12 months, fixed term lease. If your tenant moves out after every 1 year lease, so you sign a tenant and then that tenant leaves after 12 months, you go find another tenant, and then they leave after 12 months, and just on and on and on and on, okay?
Are you saying with a vacancy in between?
And there is 1 month of vacancy in between. So every time that happens, you don't find another tenant in time, and there is 1 month of vacancy in between. And every time that happens, you're probably going to be doing some repairs as well, right? So let's assume it's $2,500 worth of rent that you're missing out on. And every time that happens, you got to hire a handyman to go in there and spend $500 in labor and parts. That means that you're missing out. You are bleeding $3,000 every year in profits. That's the potential. Now, it could be, like we said earlier, it could be 2 months worth of vacancy. Some markets, it takes significantly longer to find a tenant. I would say historically, we've never really ever had a problem with a vacancy being more than 1 month. We just had one recently that was 2 months. I think that was the first time in the last 10 years we've had one that was 2 months. That really sucked. Well, we had someone signed up, but then they backed out. That's what happened. But we've never really had any trouble. So I always say 1 month worth of vacancy is kind of the risk that you're exposed to. But it could be more. But in this case, in this example, it'd be $3,000 every time a tenant decides not to renew. If you're going to hold this property for 10 years, you have the potential of losing $36,000 worth of profit over 10 years. On a property that's, let's say, an $80,000 investment, you had the potential of losing 45% worth of profits. That's 45% that you're exposed to.
Yeah.
If you don't follow these little steps, if you don't take this seriously, that is a 45% return that you have the potential of making or not making or losing. So you do need to take this seriously. If this were a $60,000 investment, you have the potential of losing 60%. 60% ROI. The difference would be 60% more higher ROI if you didn't have any turnovers. If the tenants moved in, says, oh my, OMG, oh my G, I absolutely love this place. This is perfect. Absolutely. I will sign a renewal. I'll sign a renewal for the next 5 years. Lock me in, baby. I don't care. I need this place. I love this place. And we have tenants like that all the time. All the time, because we send out renewal offers. We just did a ton here over the last few months. And how many of them said, OMG, I love this place. Of course, I'll sign the renewal. Thank you so much.
Lots.
They're actually happy to hear that we have said, we grant you the permission of staying at this rental property. Some tenants, if you choose the right tenants and you treat them really well and you have a great product, they will be happy when you ask them if they would like to stay. Mm-hmm. They will feel joy and happiness of knowing that, wow, they're going to let me stay here. Yeah. Because the thought of leaving just sounds so incredibly terrible. Yeah. Right? So this is what I mean. Like, if you set it up right, you have the potential of having a tenant who stays for 10 years. That means an additional $36,000 worth of profits, a 45% or a 60% higher ROI. If you were going to make 140% ROI on this property over the next 10 years, you have the potential of making 200% ROI. Mm-hmm. That's crazy. And I don't know how well you guys know your numbers. I do numbers like this all the time with our students. We're constantly running, profit analysis. We're looking at what the potential return on investment is with all these different scenarios and doing projections. And then also, I share my actuals as well. Realistically, someone on a deal that we would do, we would expect to make somewhere around 200%. 250% ROI over 10 years, right? On an average deal that we would do. An additional 60% is an additional 20% higher profits. If you think about that. Yeah. That might not make sense because I'm doing it really fast, but you have the potential of going from 250 to 310. Right? But by ignoring these things, you're just leaving money on the table. You are literally flushing it down the toilet. Right? So pay attention to the numbers. That's the most important thing, guys. Pay attention to the numbers, figure it all out, and then build the systems right to make sure that you protect them. All right? That wraps up today's show, guys. We really appreciate you guys joining us live. Thank you for everybody else that's listening to the recordings. Anything you guys need, please, anything you guys need, we're here for you. Send us an email at info@reimorningshow.com. Sending your questions. We'll answer your questions. We love doing it. And if any of you guys are interested in the remote property management course, online video course put on by the GOAT, Gabby, go to reimasters.ca. There's a 50% off discount code for this week, just until Sunday. Go get that right now. And we will see you guys all tomorrow.
Bye.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.